What's up, gang? Welcome to the Greatness Machine. I'm your host, Darius and Jaspreet. I'm so pumped to have you here with me. Now listen, the Greatness Machine, we're about two things. Number one, people who are living their passions. And number two, those who are creating greatness in the world and doing both of these things despite the odds against them. Each episode, we're going to feature interviews with game changers, business leaders, telling us their origin stories, what made them tick, what got them to where they are now. Why? So it can help you step into your greatness within your life, your business, and your career. Occasionally, you might hear a few solo episodes from myself, moi, as I leverage my 20 years of entrepreneurship as a CEO and founder to help you grow and level up in your journey to scale your life and your business. So come be a fly on the wall, enjoy the conversation, and I'm stoked to have you here with me. Guys, welcome to today's episode of The Greatness Machine. I'm your host, Darius and Jaspreet, and boy, do we have a special guest. Jaspreet Singh is in the house. What's up, brother?
What's happening, man? Thank you for having me.
Oh, dude, it is a Wednesday. It's like hump day. Just ready to get after it. I'm so pumped to have you here, dude. Like, we've been trying to get you on the show for a while, and finally you're here. It's all good.
Dude, I'm excited, man. It's a pleasure and it's an honor to be on, and I'm super excited for everything we're going to go over today.
Yeah, man. We're going to be talking money, audience. You guys know me. I love money. I like talking money. Money is energy. So, guys, I got introduced to Jaspreet and his work. He's been on a ton of awesome podcasts, but I saw him come up in my social. He was on Lewis Howes' School of Greatness, which we're a fan of the show. And just talking, like making things make sense when it came to money. And I was like, oh man, I like this guy. I want to interview him. And like you guys all know, I'm selfish. I put him on the list. The team went after it, and he was gracious enough to agree to come on the show. So here we are today. I'm going to go over his formal bio for those of you guys that are not familiar with Jaspreet and his work. And then we're going to pop into origin stories. So you guys, Jaspreet is the host and founder of the Minority Mindset YouTube channel with over 2 million subscribers, that's insanity. Creator of Briefs Media, and that's a platform that offers financial newsletters and courses for financial literacy. And he's recognized as one of the top financial influencers by Benzinga. So this is a money master here. More importantly than that, he's from Detroit, Michigan, which you guys all know, D-Town. We love that city here. Our friend Barbara Yolis and all those folks are over there. But man, Jaspreet, I know like people generally don't wake up. I saw actually that you went to law school and that you're a University of Michigan grad. I know that most people don't just pop straight from that into financial influencing, but I'd love to hear some of the origin story, man. How did you get to where you got to?
Yeah, well, I don't think influencing is the right way to word it for me, or at least that's not how I say it. I didn't grow up learning about money. I grew up in a very traditional Indian house. My parents are immigrants from a state in India called Punjab. And so when I was growing up, they gave me two options. They said, Jaspreet, you can be a doctor or you can be a failure. You get to pick which one you want to do. And so I wanted to be successful because I saw how hard my parents were working. And so I said, okay, there's nothing wrong with that. I will work to become a doctor. And when I say my parents were very serious about this wasn't like a suggestion. In middle school, I was struggling in my English class because English was my second language. And so my parents decided to get me a tutor. The tutor was not for the English class that I was on the verge of failing. It was a tutor to help me get into medical school. It was a tutor for the medical college admission test. I was in like 6th or 7th or 8th grade. I forget what year it was. But that's how serious they were that you have to become a doctor. Well, along the way, I started learning about investing and money and financial education because I started reading these books. The first book I read was called Rich Dad, Poor Dad by Robert Kiyosaki.
I love that book.
And it opens this world to me about these things called assets and liabilities and financial education. And I was like, holy moly, I'd never heard of this term in my life. I just thought that if I got better grades, I would make more money and I'd become more successful. And now I'm realizing that maybe this whole thing that I've been told is wrong. So I kind of started some little entrepreneurial ventures. When I was in high school, I started hosting teen parties and working at weddings and doing little kind of dabbling in entrepreneurship. But I kept it a secret because if my parents knew that I was doing any of this kind of entrepreneurial stuff, they would be very upset and angry. And I also knew that I was going to go to college and become a doctor. So it was just kind of like one of those things that let me see what this is. Well, I go to college at the University of Michigan, and I didn't know what to expect in college. My parents didn't go to university here, so I thought that people go to college to study and spend all their time in the chemistry lab and do all this stuff. Turns out people go to college to party.
Oh, yeah, totally.
I had no idea. I get to college, and I see everybody blowing money they don't have on alcohol and stupid stuff. And I'm like, first off, where did you get this money? And second of all, I thought you were coming to college to become this big thing in life. So I wasn't really into the party scene, but I was like, well, if everybody's going to the parties and spending money at these parties, maybe I should be the one hosting these parties. Because I was hosting teen parties in high school. And the way I got into that was because I started working in the wedding business. And so I was 17 years old in college, and I started knocking on the doors of every club, venue, bar, restaurant on campus saying, hey, can I host a party here? And some of the venues would say, sure, you can do it, but it's going to cost you $10,000. I said, no, I don't got that type of money. And eventually I found a club that said, yeah, you can host a party here. We're not going to charge you a penny. Just give us 50% of whatever you generate at the door, the cover charge.
Right.
I said, all right, I'm in business. So that was the start of my first entrepreneurial real venture. I started hosting parties, which then grew to doing some concerts and shows and stuff while I was in college. But I continued to read these books because once I started reading about financial education, I got hooked because it was like a whole new world that I had never been exposed to before. And some of these books were saying that wealthy people own real estate. I had no idea what that meant. I didn't know what real estate investing was. I didn't know any real estate investors. Like, investing was a completely foreign concept for me. And when I was 19, it was 2012, and I was studying for the MCAT, the Medical College Admission Test. So I was spending morning to night in the library, just cramming. And if you remember 2012, that was when it was the bottom of the housing market crash. The housing market crashed in 2008. 2012 was the bottom of it. And I'm in Metro Detroit, which was hit exceptionally hard because the economy ran on Ford, GM, and Chrysler. GM went bankrupt, Chrysler went bankrupt, Ford was on the verge of bankruptcy. So the Michigan economy and housing market was decimated. Housing prices have fallen by north of 90% in Michigan, in a lot of neighborhoods here. So I'm studying for the MCAT, and I'm reading books saying that wealthy people own real estate. Now I'm like, do I want to be a doctor? And I'm not sure what I want to do in my life. And I was like, I have some money in the bank now because of these parties that I'm hosting. And I started looking for real estate opportunities. Long story short, on August 22nd, actually, this is 2011. I apologize. It's 2011.
Wow. Bottom of the real estate market. Jeez, you're scraping the bottom.
Yeah. I was fortunate with timing. And I took the MCAT on August 22nd. The next day, I closed on my first rental property.
Nice.
It was listed on sale for it was previously sold for $150,000. It went through foreclosure. The banks couldn't sell it. It was on sale for $8,400. I bought it for $8,000.
Wow.
Put in a few $1,000s of renovations, and then we rented it out for $600 a month. And now all of a sudden, I'm getting this exposure to financial education. And that was then the turning point where I realized I didn't want to be a doctor. And so I told my parents I don't want to be a doctor. And my dad said, if you want to keep any pride in the family, you have to at least become an attorney. So I continued to invest in real estate. I did a bunch of things. I started new entrepreneurial ventures. I started wholesaling real estate. I got my real estate salesperson's license. I started doing e-commerce and just a lot of different things. And so I go to law school part-time, work on my business and work on my investments full-time. And I was fortunate enough to graduate law school and not have to work as an attorney because I was seeing the success from my investments and my business. I had built a real estate portfolio, I had other investments, and I had now a business as well. And around that time, I started creating content to help people in the situation that I was because I was so angry. I wish that somebody would have told me some of these things about money and financial education when I was getting started. I wish that somebody would have told me these things and showed me different ways that I could avoid so many screw-ups because I screwed up a lot. And so I started creating content, and I am an attorney, and I could charge whatever hundreds of dollars an hour. My first year on YouTube, I made about $400. So it was really just a passion project for me because I was so angry that I had never learned these things about money. Now fast forward many years later, and the YouTube channel has over 2 million subscribers. But my real job is not the YouTube channel. That's kind of like my hobby. I run a company, like you said, called Briefs Media, where we publish financial news and investor research. So we focus in on publishing what's happening in the financial markets every day. We have a free newsletter called Market Briefs that covers everything from stocks, economy, crypto, real estate, and everything in between. And then we have research that we sell to investors who are interested in knowing where markets are shifting, because we have a team of analysts that are studying that full time. So that's kind of the journey of how we got here.
I love that, man. As I read that same book too, Rich Dad Poor Dad. What's interesting though, so is my parents were in real estate growing up, so I had exposure. And you and I share something in common. My first entrepreneurial venture was club promotion and event promotion in college. It's the first $100,000 I ever lost, actually. So, and that was a long. Yeah, this is 25 years ago. So it was like, that's like $200,000 now. So yeah, that was painful, but it's you kind of like sell what you know, you're like, oh, I'm around a bunch of all these kids partying. And it's funny, as I learned something new, I didn't realize what MCAT stood for until you just said it. So
yeah,
thank you for
college admission test.
Yeah, I had no idea. What's GMAT stand for, I guess then. So what, let me ask a question. With all that being said, right now we're in a time frame where, I look at, I have an economics background. I've been an entrepreneur for a long time. I've been a pretty hardcore investor now for 5 years since I exited my business. So I spent a lot of time looking at investments, and I'm actually I've started a private equity business. So I do professional investing. I think the markets are pretty confusing right now, and I think that there's a lot. You're in an unprecedented environment when it comes to interest rates. We haven't had interest rates at this level for 40 years. You have the stock market trading at an all-time high. Questionably, you have the economy shifting in a way where it looks like we're headed towards some softening or maybe a recession. And then you have new asset classes like crypto, Bitcoin as a store of value, all these things. As I say them, I'm a person that is pretty passionate about investing, so I pay attention. The average person must be like, I don't even know what to do. Well,
yeah.
And so what are your thoughts on this? Because then the other thing, and I didn't even say it, and you have this undercurrent of AI that is fully going to potentially disrupt the entire middle part of the entire white collar workforce. So I'd love to hear your thoughts on what you guys are doing to position people interested in learning about the markets, to educate them to navigate this environment, number one, and number two, what is your thoughts on what's happening in the markets? I'd love to hear both those things.
Yeah. So the first thing, our core focus is to help people who are interested in investing their money and managing their money. And the first thing I want to say is, in order to get there, you got to make sure you have money to invest.
Sure.
Because if you have credit card debt, those payday loans, don't even worry about investing right now. The first thing you got to do is just get your money right. Start figuring out how you can save some money, how you can live below your means. And it's difficult, but you got to figure it out, because it's not going to get easier. So that's the very first step. Now, once you have the money to invest, now the question is, how and where do you invest? And what most people do is they say, all right, I'm going to go into CNBC. I'm going to go into Reddit, see what people are talking about. All right, they're saying buy this stock. I'm going to buy the stock because it's been booming. And then what happens to a lot of people is you end up buying high because everybody's buying it, and then things start to go down, and now you sell low, and then you hate the markets and you think that everything is rigged. This is kind of a reoccurring pattern that we've seen amongst people again and again and again and again and again. So the first thing that we like to establish and help people understand is there's multiple ways to invest your money, and you have to know which strategy that you are. Option number one is I can be a passive investor. And this is probably the best option for 90 to 95% of America. A passive investor is, you're not going to invest in Tesla, you're not going to invest in Amazon, you're not going to invest in Nvidia. Instead, what you're going to do is you're just going to invest your money in the markets. So, for example, the S&P 500 is a group of the 500 largest companies in the stock market. Instead of going out and investing in each one of those companies individually, you can invest in a fund that will give you exposure to all 500 of those companies, which includes today Tesla, Amazon, Apple, and Nvidia, and all those companies. And the nice thing about this is, if hypothetically Amazon starts to suck and the company's on the verge of bankruptcy, the fund will automatically kick Amazon out and replace it with another fund, and you don't have to touch it. So this is what passive investing is you're just investing in the markets. You can invest in the S&P 500, the Dow Jones, which is another very popular index, or the NASDAQ, or even the total stock market. There are funds for these types of indexes out there. And in order to win as a passive investor, what I recommend, or what I say, and I can't recommend anything to anybody, I'm just a random guy on YouTube, I like to say, you got to do your own research. But what I always tell people is ABB, always be buying. That's the way you win. You buy every week, every 2 weeks, or every month, set up an automatic system. When markets are booming, you buy. When markets are crashing, you buy. When markets are sideways, you buy. When it's raining, you buy. When it's sunny, you buy. When it's a Democrat in office, you buy. When it's a Republican in office, you buy. Because the mistake that so many people make, and we've seen this happen time and time again, is that when markets go down, people panic and they say, oh my God, I got to sell out of these investments. Well, if you are a passive investor, the only thing you do is when markets go down, maybe buy more. That's how you win. Don't even worry about what's happening in the White House. Don't worry about AI. Don't worry about all these things. You just ABB, that has been proven to win. Option number 2 is you can hand it off to somebody else. You can hire a financial advisor, which is great for some people, not great for other people. A financial advisor has a fee. They're going to charge somewhere between 1 to 2, maybe 2.5% in assets, which means that you're going to end up paying them a lot of money. Now, it might not sound like a lot, like a 1% fee might not sound like a lot of money, but that 1% fee is compounding, which means you're going to end up paying hundreds of thousands, potentially millions of dollars in fees over the course of your investing career, which for some people is fine, for others, it's not worth it. Option number 3 is you can be an active investor. And we're not talking about trading here. I'm not talking about flipping or anything like that. I'm talking about investing your money, but looking for where the shifts are happening. And this is where our firm, Briefs Pro and Briefs Media, we specialize, because we're always studying where money is moving. So you mentioned AI. AI is creating shifts. And you're 100% right. I mean, what does AI do? AI requires a lot of data. But where is that data stored? It's stored in data centers. So that could create potential opportunities. Then you can take that the next layer deeper. As we're seeing more and more data centers established around the world and the country, the next layer is innovation on where data centers are going to be placed. There are certain companies now that are looking at putting data centers in space and on the moon. That's potential innovation. There are companies that specialize in data center energy because they require a lot of energy. And there's smaller companies now that are starting to emerge that are fighting to be that leader in data center energy, because if I can be a little bit cheaper, a little bit more efficient, I can now dominate that market. Again, that could create a potential opportunity. There are companies that specialize in cooling the data centers, because inside of these data centers, there's a lot of computer chips that get very, very hot. And when they get hot, you have to cool them down. Otherwise, the entire facility will collapse. So there's companies that are specializing in innovating. How do you cool the data centers in the most efficient way possible and keep things working efficiently? So you can start to see now, this is what active investing is all about. It's about owning a piece of where the economy is going, or where you think it's going. And it's more risky for more potential return. But for some people, that is something that they want to do. This is the game that professional investors do. This is the game that actual investors are doing, is they want to know where the money is moving. And that's some of the research that we work to provide.
Well, thank you for that. I appreciate the overview. And I think, like, for an average listener, you're probably right. Probably for 90+% of them, like, yeah, just put it in a low cost index, and set it and forget it, or keep buying it to your point. So you dollar cost average, and you're not really dependent upon some one time in the marketplace. When you start looking at, I'm a pretty big fan of Munger and Warren Buffett. We actually interviewed, I don't know if you're familiar with Manish Pabrai. Manish was on the show a couple months ago, and he's essentially a Warren Buffett protege. When you look at the way those guys approach investing, they're looking for, there's a couple things I think that they promote that I like, and I'd love to hear your thoughts on this. Number one, they're promoting that, like, if you don't understand the investment, you shouldn't invest in it. And so I get approached all the time. I'm a qualified person. I get investment opportunities all the time. And I look at these things, I'm like, dude, I don't understand this. I'm like, and I'm not smart enough to go and do the research to understand it the way I would need to understand it to make a sound decision. So for me, a lot of the times I have a rule that if I don't understand it, I don't invest. That's number one. And number two, when I start looking, I do like value investing. I like looking at stuff like, I'll use an example. There's a stock called Chicago Atlantic. I don't know if you're familiar with this company. They ticker REFI. They do cannabis. They basically offer debt to cannabis companies. And they I was a private investor in their fund before, and then they went public, and they have a public ticker now. They have two public tickers. I like them because it's just simple. It's like they're just lending money. It's cross-collateralized against real estate, and it pays a 14% dividend. It's 13 to 14%. 12% is kind of the floor. And it was trading at 90 cents on the dollar. I'm like, oh, that's kind of a no-brainer. And they have no debt, so minimal leverage. So for me, I'm like, oh, that seems kind of simplistic. Like, I don't have to overthink that, right? And it was trading at a discount, and it's just a simple balance sheet. So it goes back to the original thought, which is I don't invest, and I have a background in debt. I managed a big mortgage company, so I understand debt pretty well. If I don't understand it, I don't invest in it. The average investor is probably not going to understand a lot of stuff. So, to your point, they can go into an index and where they don't need to understand it because they're diversified. But what are your thoughts on like people when they start to see stuff like crypto, or they're reading Reddit and they start seeing these like meme stocks? They don't understand necessarily the fundamentals of the stock. It sounds like you guys provide a service that helps people to understand it better. How do you think people should approach that?
100%. I mean, there's a story, and I have a poster in our office of Tulip Mania. And I love this story because the way that what happened was in the Netherlands in the 1700s, 1600s, there was tulips brought to the Netherlands, and it was a beautiful flower, and people got really in love with this flower. And it's going to sound like a very cheesy story, but hear me out here. So people started to really like the flower to the point where tulips started to become expensive, and because people kept buying them up because they weren't native to the Netherlands. And it got to the point where some of the financiers, the financial people said, people are paying a lot of money for these tulips. What if we start buying these tulips as well? Because people are paying more and more and more money, and there's not enough of these tulips out there. And then they got to the point where those same financiers said, hey, why are we even selling the tulips? People just want to make money from these tulips because they're going up in value so much. So instead of actually selling the tulip, let's sell contracts and futures and other derivatives of these tulips. So you're just buying a paper that says you own some exposure to these tulips. And yes, I'm talking about flowers here, the flower bulbs. And this was going on to the point where it created the first financial bubble in history, because people were now realizing, oh my God, I can get rich by buying this tulip bulb. And people started now they were selling their houses, refinancing their houses to buy one tulip bulb. Sounds crazy, but people were so excited by this opportunity to get rich. And now the farmers said, we have all these tulips. We're going to get rich. Let's hold an auction to sell off some of these tulips. That way we can realize some of these huge gains because people are selling their houses for one tulip bulb. So the farmers held an auction. Nobody showed up. Nobody wanted to buy the underlying asset. And that was what triggered the bubble to burst, because everybody realized they're just buying pieces of paper hoping that they don't have to hold on to the bag. Nobody's caring about the underlying asset. Nobody's caring about the tulip. And then markets crashed, and then it created a big financial depression because now people had invested all this money, all this debt, buying all these derivatives and contracts of tulips, but nobody cared about the tulip. Understand the asset. Know what it is that you're buying, because if you don't, you might just be buying a bunch of tulips thinking that it's going to help you get rich.
I love that, man. It's interesting. Like, as you said that, I started thinking because what is actually the real economic utility value of a tulip, right? It's, it looks pretty. Oh, it's beautiful. It's a gift I can give to someone. It's not worth, $3,000 unless it's like, maybe some rare tulip that there's one in the world that there's a bunch of people that care about it, but that's going to be rare, right? So when we start talking about assets and utility value, when we start talking about buying a stock, and I love Warren Buffett, the way he describes this, which is, hey, I'm going to buy a piece of the company. I own that company. It does something. It provides value to the world, right? So when we look at that, that's something I think any listener can kind of wrap their head around. This is something where I look at an asset or asset class like crypto, and I own some crypto. I own it for the reason as I view Bitcoin as a store of value, as digital gold, right? This is and honestly, it's a hedge against fiat currency in my mind. But what is your guys' position on crypto? Even if we're talking about the utility value of an asset, because if you ask Buffett, he's going to say, yeah, there's a famous saying where he's talking about you wouldn't take all the crypto in the world for 25 grand. And I'm like, oh, that's silly. But just because people do think that it's worth a lot, right now it's trading $120,000 a coin, right? What's your guys' position on the crypto markets, on Bitcoin? Do you guys have a position on this?
So our firm doesn't have a position on it. I mean, we have some analysts that are pro-crypto, some analysts that are anti-crypto. I think the big thing you have to understand is, at the end of the day, no one really knows until after the fact.
Right.
And that's one of the things you have to understand. And so your goal is to make an educated guess. Now, I started purchasing Bitcoin back when it was around $3,000 a coin.
Wow.
That was when I started talking about it on YouTube. I sold off a chunk. I had around $70,000 a coin, because for me, you're right. I do think that there's a case to be made that Bitcoin is a store of value, it's a store of energy, it is a hedge against fiat currency. But the real value is that other people are using Bitcoin. That's what really makes that network effect, that if more people are using it, it becomes more valuable. So there's a lot of kind of nuance there. And now we have the United States talking about building their own sovereign Bitcoin fund, and other countries around the world implementing it as well. But a lot of things can change. So I think it's extremely speculative. That's the way I look at it.
Yeah.
And so the way that I break down my portfolio, and I don't recommend what I do to anybody else, is I invest some money into 5 places. Number 1 is physical real estate. Number 2 is stocks. Number 3 is what I call speculative. Number 4 is physical gold. And number 5, my largest investment, is my own business. But if we ignore my own business, real estate to physical gold, that's how they go in order. So crypto is my second smallest. And speculative is my second smallest. And my speculative investments make up about 16 to 18% of my total portfolio. Now, out of those speculative investments, I invest in startups because they are extremely speculative. And I also invest in cryptocurrencies because I think they're extremely speculative. So for me, it's speculative. I don't know what the heck is going to happen, right? I have predictions. Obviously, I have some money in it, so I think that there's potential there. But I also understand that it can go down to zero. And if it goes down to zero, I will be completely fine. That's the way that I look at it.
I appreciate that. That kind of leads me down the road of, there's a good friend of mine who's here in Austin. His name is Justin Donald. He has a book called Lifestyle Investor, and he talks a lot about cash flowing assets. And so, obviously, you invest in real estate, which is a cash flowing asset, should be a cash flowing asset. It's not always the case, depending on how speculative the market is or which market you're in. I've taken one of the positions he takes that I bought into, which is build a portfolio of assets that replaces your income, because then you basically decide where you spend your time because you have this passive income coming in. I think I hadn't really thought about that until a few years ago. And then I got pretty aggressive about it. And for me, that's been kind of my focus, is okay, let me replace my financial economic needs post-tax by buying assets that throw off cash flow. It's not, by the way, it's not the most tax efficient way of doing it normally, because you're paying ordinary income tax on that stuff. But you get peace of mind that, hey, I can decide where I spend my time because my income's taken care of. How do you guys think about cash flowing assets, replacing income, when you start thinking about portfolio development, or how you guys analyze investments?
So again, our firm doesn't have one position on it. We have some analysts that are very against income because of the tax. I love cash flow. That's my position.
Yeah, me too.
Because for me, kind of like what you said, I this is me. I hate the idea of buying an investment and then hoping that it goes up. To me, that's just like, oh my God, what if it goes down? What if I have to sell it and the markets crash or whatever happens? And I don't like selling. In fact, my goal is just to keep buying. I want to accumulate. And if I just keep accumulating, how the heck do I make any money? And that's where cash flow becomes extremely handy. And you're right. The downfall with cash flow is, number one, let's think about this from a business perspective. If I invest in a company and they make $1 million of profit, there's three things they can do with that money. They can take that money and reinvest it to make $2 million of profit next year. They can take that money and save it for an emergency, so if a pandemic happens, they don't have to declare bankruptcy. Or they can take that money and give it away to shareholders, people like me, in the form of a dividend. Well, if I'm an investor, I'm either going to probably want one of these three things depending on where I am on my journey. And a good company should do all three. But there is a security that you get when you're getting that cash flow today, instead of just hoping that it'll continue to go up in value, because, well, asset prices can go up and down on a whim. And so that cash flow gives you a little bit of security. Now, yes, you have to pay taxes on that income, but real estate also has some of the biggest and best tax breaks that our tax code has to offer. Because when you invest in real estate for cash flow, and I'm telling you this as an attorney who's not your attorney, what you could do now is, number one, let's just say you made $10,000 of profit. So you made $20,000 of rental income, $10,000 is your expenses, your property management fees, your property taxes, your insurance, your maintenance, management fees. So you're left with $10,000 of net income. Well, of the $10,000 in net income, normally you would tell the IRS, hey, I have $10,000 of profit that I have to pay taxes on. But the IRS says, actually, because you invested in real estate, the first thing you get is a write-off because the property is 1 year older. Mm-hmm. It's called depreciation.
Yep.
So you get to now write off a piece of the property value, and it's going to depend on what the value of the property is. And the more sophisticated you get, the more sophisticated your accountants get. You can do a lot of fancy things to essentially potentially wipe off some or all of that $10,000 income. But then the next thing you can do is you get to write off ordinary and necessary expenses for that business. So what is ordinary and necessary? It's kind of a gray area. And this is where, again, your accounting team becomes extremely important, and your legal team, because ordinary and necessary is what is ordinary and necessary for your business. If I own a real estate business, maybe I need a Ford Raptor to drive to my properties. That Ford Raptor is a beautiful car, but if it's a business expense, well, now that becomes a write-off. Well, my Ford Raptor also needs a lot of gas. So that could potentially be a write-off. I also might need a cell phone to run my real estate operation. That could be a write-off. I also might need a laptop to run my operation. That could be a write-off. I might need to go to Hawaii to look at some property over there. That could be a write-off. While I'm in Hawaii, I might need a hotel. I might need to eat at certain restaurants. Well, that could be a write-off. And so this is where now, yes, you can take some benefit, but if you understand the tax code, you understand that the tax code is a rule book, and what wealthy people do is they learn the rules, or they pay somebody to teach them the rules to be able to navigate through the tax code. So yes, income can create tax implications for stocks and real estate. With real estate, you also have some of the biggest and best tax breaks that you can offer, which is why you have some people that can make very large sums of money every year from real estate, kind of passively, and pay $0 in taxes, and it's 100% legal.
Yeah, it's amazing. I don't want to make fun of my real estate friends that are wealthy, but I'm going to. Like we always joke. I'm like, oh, my real estate friends that are wealthy, they're like, and I have some friends that are like really successful in real estate, and I'm like, they're like, oh, we have the lowest, we have the highest pay per point of IQ out of anyone we know. You know, they're like, you know, and it goes back to what you were saying before, like, you know, like being good at making money. I talked to a lot of people about this. I'm like, look, it's not about being, you don't have to be the best person at taking tests or the best grades in school. Some of the most successful people I know are probably not grade students. but they are curious and they are street smart and they care about, learning the game. And it's a game, I believe. If you start thinking about money as a game and quit and think about money as energy, then I think that puts you a leg up where you're detached from it as opposed to being attached to, the outcome of the game. What are your thoughts on that when I say that to you?
Oh yeah, I say it all the time. I say I'm stupid. I mean, I say straight up. I don't say it as nicely as you. I'm not that smart. I have a hard head. That's my advantage. I'm stubborn and I have a hard head, and I'm stupid enough to believe that I could do something. That would really be my advantage. Because I mean, in the terms of in the world of business, it is hard.
Yeah.
And if I never understood this. But people have always said, if I knew how much work it would have taken, I probably wouldn't have done it.
Right.
And that's really where kind of dumb belief comes in, because I never, when you're in that hustle mode, you're not thinking about what I have to do tomorrow or next week, next year, or all the work you have to do. You're just like, I just got to get this done because I want to see something successful. And it's just this like dumb belief that like I'll figure it out. How? Yep. I don't know. I will figure it out. And that's a trait that a lot of entrepreneurial minded people have, that I think you just don't get very analytical. And there are certain types of people that struggle with that. If some people are extremely analytical and we start to do that, oh, okay, so if I want to start this idea, I want to invest in this thing, I have to do analyze. You can easily walk yourself and talk yourself out of an opportunity, an idea, because of the risk. And the reality is there's going to be risk. I can guarantee you, but there's also risk of not taking action.
Sure.
And the real guarantee is if you take action and screw up, I guarantee you will be smarter. You'll probably lose money. Like when we do anything, I always say, look, I guarantee you investing has risks and you will lose money.
Sure.
It's a part of the process. The goal is to make more than you lose, but unless you're willing to lose, you're never going to gain.
Totally.
And you got to be willing to get punched in the face. And that is, you got to be kind of stupid to want to do that. But hey, look, it's a reality. If you want to be able to get there, I don't know any other way to do it.
Oh yeah, no. I've won way more than I've lost, but when you lose, and you got to hate losing, I think too. Not that I think everyone hates losing, but you got to hate it enough where like you're vigilant against it. But to your point, be willing to like analyze the risk, take a good risk. There's a risk reward ratio, right? I go, hey, look, I like 1 for 10s depending on the certainty of the outcome. Entrepreneurial, if I'm doing something entrepreneurial, it's a 1 for 10, 1 for 100. I better if I'm going to pour my time into something, there better be an asymmetric return. So I love where you're going with that. And yeah, like, dude, I don't think you're dumb. like you're a smart dude, but the fact that you say it is funny.
I went to the University of Michigan. There are some extremely intelligent people there. Right. I went to law school. I met some extremely intelligent people. These are, people that are so smart. I know some people that can recite the entire tax code to me. And for me is, look, I'll just pay you.
Exactly.
That perspective is, it's some people are extremely smart, and I just don't have the capacity to do that.
Right.
But I have a different skill set.
Yeah, no, it's and I think it's playing your strengths, right? Like obviously you're a pretty well-rounded guy, and you are playing your strengths. So that's awesome. Let me ask you a question. I know obviously I've cornered you a couple times saying, hey, what do you think about this strategy? And you're like, we don't have an opinion on the markets. If I was forcing you to give me your thoughts, given what's happening, do you have any type of meta position on hey, what do the next 2 years look like? Because I have this, I've found that, and this is probably at my detriment, I've been a perennial bear. I don't love investing in the stock market. It's probably my lowest holdings is in the public markets because I don't like the volatility that much. I'll do a little bit, but I'm always like, man, something bad's going to happen, and I've lost a lot of opportunity having that feeling. But I do actually feel like right now we're at an interesting kind of cross section. And since COVID till now, and I think that where rates are at and I don't like to predict the markets, but I also don't think rates are going down very much from here just because of where we're at with inflation. Do you have any personal positions on inflation or interest rates or where you think the markets are going short term?
Yeah, and so I'll tell you how I come to everything, because I think the backstory is just as important. Um, I like to study history because while history doesn't exactly repeat itself as does rhyme,
Yep.
and I guarantee you a recession is coming, 100%. The question is when,
Right.
and that's the part that everybody has a prediction on. And the analogy I'd like to say is these financial predictions are like armpits. Everybody's got a couple, and some stink more than others. Because the reality is, if we look at history over the last 100 years, we have seen 16 recessions. Over the last 100 years, we've seen 25 stock market crashes. And by stock market crash, I mean a bear market, where the markets have fallen by 20% or more. So if we take a look at that, that means on average, we are averaging more than one recession per 10 years. We're averaging about 2 stock market crashes every decade. And we went the longest period without a recession between the 2008 crash and the 2020 pandemic, and the 2021 was kind of forced because the whole economy was shut down. Now we have so much money that has entered our economic system because we printed about $5 trillion during the pandemic time, and we gave it away in the form of stimulus checks, unemployment checks, PPP loans, grants for businesses. I mean, it was just free money everywhere.
Insanity.
Wild time. There's a cost to that, and that cost is, of course, inflation, which we're still paying for today. And now we have raised interest rates trying to counteract all the things that we have done, while at the same time, a lot of Americans haven't seen their incomes rise. I mean, between 2020 to 2025, the median income in America has grown by around 20%. Reported inflation is about 24%. And that's the reported numbers. We know that real inflation is oftentimes a lot higher than that, which means for the average person, life is more expensive today than it was 5 years ago.
Yep.
And that means you have less money to save and invest, and you got to spend more money in your housing and your groceries and everything else in order to survive. So that's something we know. We know that consumer sentiment goes up and down. We know that people are concerned about tariffs. We know that we are seeing the most number of layoffs and bankruptcies in 2025 so far, the first half of 2025, that we have seen since the end of the 2008 Great Financial Crisis, around 2010 or so. We haven't seen this many bankruptcies since then. What's causing that? Well, some people are saying it's because of tariffs. Some people are saying it's because of high interest rates. Some people are saying it's because of inflation. Some people say it's because of AI. The reality is it's really a combination of kind of everything working together, because our economy doesn't work in a vacuum. There's not one thing there. And so now the question is, okay, Jaspreet, when? Here's why it becomes so difficult. Because we also have the X factor, our government and the central bank. If tomorrow, or let's actually make it more realistic. You were talking about interest rates, right? So the interest rates, just so everyone's aware, in the United States are set by an entity called the Federal Reserve Bank. They're the central bank here in the United States, and they're called the Federal Reserve Bank, but they're not a bank. You and I can't go there to deposit money. They're not a reserve because they're not sitting on any cash reserves, and they're actually not federal. It says so on their website. They're not a part of the federal government. So kind of a funny name, but they set interest rates. Now, the chairman of the Federal Reserve Bank is a guy by the name of Jerome Powell, who was essentially saying, hey, Donald Trump, I don't care that you want me to cut interest rates. I'm not cutting interest rates. That's kind of the stance that he has taken. Now, maybe he'll cut interest rates a couple times before the end of the year. We'll ultimately see. But what President Trump has essentially made very clear is that when Jerome Powell's term expires in 2026, he wants to replace Jerome Powell with somebody who will want to cut interest rates very aggressively. President Trump says he wants 1% interest rates, which is a lot lower than where we are now. So let's go through the scenario. Let's just say that the Fed does not cut interest rates in 2025, or maybe they make some slight cuts. It's not going to really change anything. But if 2026 comes 12 months from now and President Trump replaces Jerome Powell with somebody who's very aggressive in cutting interest rates, that could change the economy. That could change the housing market. That could change the car loan market. That could change everything, because interest rates are really kind of like that blood through the economic system.
Right.
That person could also then start printing money more. That could change everything. I mean, if we take a look at COVID, pandemic, 2020, markets were collapsing at the fastest rates ever. And I was making YouTube videos saying, hey, look, here's why I'm buying. I don't know what the heck's going to happen. Either we're all going to die or this is going to be a great buying opportunity. Right? There's really no in between. What I didn't predict, and I've studied a lot of financial history. What I didn't predict was going to be the speed and aggressiveness that the government and the Fed were going to stimulate the economy.
It was crazy, man.
Anybody that would have thought that.
Yeah.
But we went from the fastest stock market sell-off in the history of time. The stock market was selling off faster than the Great Depression, to then the fastest stock market rally in the history of time. Both of those same things happened a matter of months apart in the same year. That's the X factor. We don't know, and that's why predicting is gambling. I mean, there's so much uncertainty. We can try to understand what President Trump wants, what the Fed wants, but that can change things very quickly. And we know that no president wants to see a recession under their watch.
Right.
Sometimes we need it. That's what is helpful to reset the economy. But nobody wants to go through that economic pain, especially now. So that's why, the game for savvy investors is not trying to time the market, but understand where the opportunities are in the market, depending on what type of investor that you are. So if you're a passive investor, again, you just keep buying. ABB, always be buying, right? Markets up, down, sideways, don't matter. You just keep set it and forget it. Just keep buying because the markets are going to crash. They're going to grow. Who knows when? If you're working with a financial advisor, just make sure they're not ripping you off in fees and make sure you're actually getting some returns. If you are actively managing your money, now this is where you got to understand, where is the economy going to be in 10 years? Where is more money going to go? Over the last 10 years, AI, technology, these were huge shifts over the last 10 years. Now, as an active investor today, where's that money going over the next 10 years? And so this is now, the more research you can do, the better opportunities that you can find, but that's the way that you need to be thinking as an investor. And then if a recession happens, if and when that recession happens, have some money on the side. Because the reality is recessions create more millionaires than any other time. Market crashes create some of the best buying opportunities ever. Some of my best investments were made during the 2020 pandemic and after the 2008 housing market crash. So be prepared for that, but waiting for it is oftentimes a losing game because you never know how long you're going to have to wait.
Yeah, love that, man. I appreciate your thoughts there. I was like, I didn't realize Powell's terms up next year. I'm like, I'm going to go buy some physical gold. I'm going to go load up on crypto because they're going to start printing money. It's like, dude, we are in unprecedented times when you look at the amount of debt this country has. It's scary. You said you hold physical gold. Like, why not contracts? Like, is that because you're like, is that like your prepper?
Let's go. No. If we go back to the tulip example, right? I don't want to own a piece of paper that says I own a tulip. I want to own the tulip. I want to own the gold. Now, obviously, I don't think gold is a tulip in that sense, but right. I want to own the actual asset. When I wanted Bitcoin, I don't want an ETF of Bitcoin. I wanted the actual Bitcoin. I want to own the physical real estate. I don't like investing in REITs so much. I like the actual asset. So for me, that's why I like gold. I have gold is about 2% of my total portfolio. It's just a small piece, but I've been buying gold since before it was, I guess, cool before the pandemic. And the reason why it's not really that exciting or that kind of like, oh, you're so smart. No, it's actually a lot simpler than that. In the Indian culture, inflation is like not something that people understand, but it's something that people live by because there's a lot more inflation in India. Sure. Where the value of that currency, rupees, just been devalued so much. And so what people in India have typically done and historically is like when you have extra cash, you don't keep it in the bank. You don't keep, I guess if you're rich, but for regular people that have some extra cash, oftentimes they'll just buy some gold. Because they have always felt that kind of like gold was a wealth. That was what wealth was. It wasn't having a whole bunch of money for like the regular person. And so I just kind of grew up in that culture, and so I would just buy a little bit of gold.
I love that. That's cool, man. Man, what a fun conversation. I appreciate your insights. You giving me some stuff to think about. But yeah, that's it. This is really fun. I'd love, look, we're coming near the end of the show here. I'd love for anyone that wants to learn more. We probably have a mixture of everything from passive to active investors. You're doing some cool stuff with the work you're doing. Where can people learn more about the work you're doing, Jaspreet? How can people connect with the work you're doing?
Well, first off, thank you for the opportunity. This was a lot of fun. And thank you for everybody listening. I appreciate your time. I know how valuable your time is. So hopefully you got some value out of this. If you want more, we have a ton of free resources. You can check out my YouTube channel, Minority Mindset, just for updates on whatever I'm covering in financial markets or investing. That's on YouTube. If you want to get our free newsletter, where my journalists are breaking down what's happening in the financial markets into a quick 5-minute read, you can just go to briefs.co. That's briefs, like underwear, briefs.co, or you can just search market briefs on Google. And then for those of you that are active investors and you're interested in more research, we have a product called Briefs Pro that you may be interested in.
Awesome. You ready for the greatness question?
Always.
All right, man. What is the number one barrier to creating greatness that you've overcome in your life, and how did you overcome it?
Being willing to do what you believe, even when everybody else says otherwise. I had my fuel to get started was just kind of proving everybody wrong, because I was often told that somebody like me can't be an entrepreneur because I didn't have that knowledge, that background, that family, that kind of whatever, because I grew up thinking that the way you become successful is being a doctor. And so really, I wasn't supposed to be here. I'm not supposed to be doing this. That's why I call myself a random guy on YouTube. I really am just a random guy. And you can do whatever it is that you want to do if you're willing to work your freaking butt off. And, sometimes you just got to be quiet, shut off all the noise, and just get to work and just let people talk. And I believe in you. Stick with it, even when things get hard.
Love it, man. Don't listen to the naysayers, everybody. Jaspreet, man, what a freaking pleasure having you on here, my friend. It's been enlightening. I love your thoughts. I'm interested to myself just to check out your Briefs Pro. I'm a nerd when it comes to this stuff, so you'll have me. At least I'll be checking that out. And audience members, listen. This is like an important thing here. Energy is money. I know a lot of you guys are entrepreneurs. You guys are out there grinding your businesses. I will tell you the biggest mistake I made was being 100% focused on my business and not starting to think about, hey, what do I do with my assets as I start to build assets outside the business? So you guys share this with our friends and our entrepreneurs. And a lot of gratitude to you, Jaspreet. Until next time, everybody, peace out. We love you. She's my lover. You are listening to The Greatness Machine, and that's a wrap for today. Listen, if you love what you heard, subscribe to the show on whatever podcast platform that you're tuning in on so that you don't miss any of our future episodes. We have tons of great people coming on, and we're stoked to have you here to enjoy it with us. Leave us a review. Tell us what you love most about this particular episode. We love getting the reviews. We love to see what you guys love most. And if this particular episode, made you think of someone who's leveling up in their business and in their life, print screen, share it with them. Leaders are the best givers. And after all, we're all here to support and grow with each other. And in case you want to see some of the fun behind the scenes shots or some of the things that we're doing, I'm actually writing about this in my weekly newsletter. Go to www.therealdarius.com and subscribe to my newsletter. We're talking about fun things like business and life and mindfulness and cryptocurrencies and gosh, I don't even know, everything and anything, but it's tons of fun stuff I write about. I try to get it out on a weekly basis. You can subscribe at www.therealdarius.com. And with that said, look, thank you guys so much. I appreciate you. I love you. Peace. We're out of here. See you guys on the next one. She's my lover.